Full Ways and Means Committee meeting. Let me begin by thanking the members of the committee for a Thursday that we're not in session. We've got a great turnout, and thank y'all for being here. Chair calls House Resolution 531, Representative Harvin.
Thank you, Mr. Chairman. 531 is actually Chairman Roberts' bill. We passed this last year out of subcommittee and were unable to get it out of full committee, and we're just bringing it back. It is very simply a constitutional amendment to dedicate 10% of aviation fuel funds to our local airports around the state.
Questions of the author by any member of this committee? Hearing none, what's your pleasure? Motion made and seconded. Do pass. All in favor signify by saying aye.
Aye.
Opposed, like sign. Thank you. Representative Martin, House Bill 257.
Mr. Chairman, if it please the chair. Can you hear me? Is it over?
Yes, sir.
I have House Bill 257 LC 41. I'm sorry, LC 344194S. Mr. Chairman, this was taken up in subcommittee. The subcommittee looked at two different options. One in phasing down the tax credit for zero and low emission vehicles. The other one for terminating that credit effective April 1st. It was the subcommittee's wisdom, and the bill that comes to you would remove that credit for purchases on or after April 1st. I think I said February previously. April 1st, 2014. The reason to bring this bill is the state has right now an unlimited liability. I believe there's about $18 million that are outstanding income tax credits. That we believe the current credit is too targeted, too rich, and uncapped, and could be a detriment to the state's taxpayers. That's the committee's favorable consideration, and we'll answer any questions.
Questions of the author of the bill? Representative Sims.
Question to my friend. Does this actually, how much is this being taken up now? I mean, how many credits are being actually used?
Well, I am told there are 18 million outstanding. Some may have been used, so there may have been more at the time, but that would, at $5,000 per credit on the zero emission side, $2,500 on the low emission side. That's somewhere in excess of 3,600 cars. The credit was put in place in 1998. The definition of our zero emission credit doesn't even match the federal definition anymore. It's just kind of its time has passed as this credit is currently defined, in my opinion, and that of the subcommittee.
For the question, so if we vote for this bill to repeal this act, we're going to actually raise taxes for somebody, right?
No, but the situation is that in some cases one is able to lease a vehicle on a short-term lease for as little as $10 to $20 a month. So I would respectfully say what we would be doing is not giving an entitlement to somebody to buy a car out at the expense of other taxpayers in Georgia.
My further question, again, I'm asking, if somebody was getting this credit and did not receive the credit now, would their taxes go up?
Their taxes would be the same. They just would not get a credit, just like you didn't get a credit when you bought your car.
I don't see that one adding up. I mean, if you get a credit, do you lower your tax bill?
If you get a credit, you pay less taxes. The taxes are still due.
That's the question I got. So we're going.
You pay less taxes.
So we're going to raise somebody's taxes. Thank you.
No, sir. I will say again, your taxes, your income taxes that are due are the same as they would be due. We're just, if we pass this bill, we're not taking tax money out of almost 10 million Georgians to the direct benefit of 3,600 Georgians at a place where I have emails where one gentleman is upset because he is not going to get this a second time. So this can happen where essentially you could drive a car in perpetuity at the expense of the Georgia taxpayer and the federal taxpayer. And I just think, again, too targeted, too rich, and not in the best interest of Georgia as a whole.
Representative Sims made a little clarification, at least from my perspective. What we're doing now, what you're doing as one of the taxpayers in the state of Georgia, is helping people buy a car. It's a plug-in car. So you spending, I say you, we collectively are spending almost $20 million a year for this item. You pass this, you won't be doing that. Now, you can call it what you want to. Okay. Further questions of the author of the bill? Oh, I'm sorry, Representative Flood.
Thank you, Mr. Chairman, to the author of the bill. And I have, I guess, some of the same concerns as this Representative Sims, and that is, with all due respect, we do pass tax credits and special exemptions, frankly, fairly often out of this committee. Is that not true?
We do. They generally have a more a broader base than, and require that the taxpayer themselves participate in the purchase or an economic event that would have a multiplier effect that would get the state back the money. But yes, sir, we do.
Well, and if I recall, we've had situations where we've provided special tax treatment to single companies.
I don't recall one we've ever had to a single company. We've had certainly limited things. We had the leader's amendment on the floor the other day specifically was to make sure we fit an example of a nonprofit building being built in Georgia that is being built at a different size, and so we specifically targeted that amendment. I believe it was pretty well unanimously supported on the floor of the House, and that was for a specific organization. So, but that was also, I believe, a nonprofit organization, not single taxpayers.
Anyway, I disagree with you on that because I'm fairly familiar with several occasions where we've done that. That being said, your concern with bringing this forward is that there is an expenditure of about $20 million, or how much does this cost the state now?
Well, there is, and I am told that there's $18 million left outstanding. When one purchases or leases one of these vehicles, you get a $5,000 tax credit for a zero-emission vehicle, a $2,500 tax credit for a low-emission vehicle, and that can be carried forward on your taxes. If you don't have a $5,000 tax bill the year you buy it or lease it, you can take that forward. So it's a carry-forward tax credit, so it's all going to be used. I am told at this point we have $18 million outstanding. I can't tell you how many of those credits have been cashed in and used in the past. What I can further tell you is we have no cap, no sunset, so there's no limitation on this. So when you ask me what the state's exposure is, it is, in fact, unlimited and undefined. If 10,000 of these vehicles are sold in Georgia, multiply 10,000 times 5,000, I believe that's $50 million. If 20,000 it's $100 million. So even the federal tax credit at $7,500 has 250,000 vehicles limitation. And the bill we talked about in subcommittee was an option to ramp down and cap and limit. The subcommittee thought that this was the way to go, and I think that we leave the state severely exposed. The gentleman brings up a good point that we do pass tax credits and exemptions out of here, but they all have fiscal notes. They all are looked at very thoroughly relative to the impact on the overall taxpayer. This tax credit was passed in 1998 when the process and policy was to try to draw zero and low emission vehicles into the mainstream market. That is being done. There are cars available for sale that are zero emission under $30,000. And when you combine a $7,500 tax credit from the federal government, a $5,001 from the state government, essentially the taxpayers of this country are paying about half the cost of a vehicle, and they can do it over and over again. I just think that's too rich, too targeted, and unlimited exposure for the Georgia taxpayer.
If the concern is parity with other tax exemptions, why not just have a sunset like we do with other bills and then come back and look at it in 2 years?
That was not the wisdom of the subcommittee.
Thank you.
Another question, Representative?
Yes, sir, I do.
You recognized for that purpose?
Thank you. Thank you, Mr. Chairman. And to my friend again, can I get some opinion from, is it proper, Mr. Chairman, to ask Revenue Department as their opinion on this?
I don't see what that's got to do with anything. I mean, this is a pretty clear-cut measure. We're repealing, well, seeking to appeal. The author of the bill is seeking to appeal an existing tax credit.
Okay, I understand.
End of story. And the Revenue Department, while they got a lot of great people over there and do a great job of collecting the money and so forth, they got, I mean, if you want to ask somebody, Representative Sims, it makes you feel better for ask somebody from the, the Revenue Department on this bill.
Yes, sir.
Go right ahead.
Okay. I just want to make sure. Question is, my question is, of the explanation here, what is the Revenue Department's opinion of the bill, and how do you think it will affect you? How would it affect you, money-wise? Yes, sir. Yes, sir.
And when I say utilized is the amount that is actually offset against liability.
Yes, sir.
Our systems aren't sophisticated enough to capture the carryover.
I understand.
Like that. In 2011, which is probably the most complete year, the utilized was 181,000. But in 2012, that went to almost $1 million. And I think that's the point when the fleet vehicles became popular. That's when it's principally used. And 2012 isn't even complete because we're trying to stick to the process.
I understand. Thank you.
I see no further questions. What is the pleasure, committee? Move to pass. And second, all those in favor signify by saying aye. Aye. Like sign, not opposed. Bill passes. Thank you. House Bill 729, Representative Rice.
Thank you, Mr. Chairman. I appreciate the opportunity to bring this bill today. House Bill 729 has several cleanup changes in it, all of which has been analyzed fairly successfully by the subcommittee, and a lot of work's been done on that. I'm going to comment on the three significant changes to this TAVT law, and the first one I'm going to comment on is Welcome to Georgia. That is the TAVT that's paid on vehicles that are brought into Georgia from another state, where residency is changed to Georgia. There have been 65,000 of these titles issued over the 2013 period since March 1st. And if the old law calls for it to be a 50-50 split, they can pay 50% 1 year and 50% the next. And there's been a marginal reception to that in terms of most people pay the money up front. The intent is to give the trade-in value is the same on the same basis as as Georgia used cars get right now. That was the original intent. That was not the department's interpretation. The department clarified these changes based upon the fact that you had to be a Georgia dealer to take advantage of a trade-in on these. Therefore, what we decided to do was found on page 14, line 492, is to provide a one-time 4% TAVT for those vehicles that are brought into Georgia, and that would account pretty much for the trade-in values of the vehicles that would be brought in over a period of time. That's the first change. Second change has to do with the fair market value of used cars. That's found on page 2, and basically the calculation of fair market value is what's in consideration. Fair market value is currently the book value of the car less a trade-in value. What's happened in many instances based on tax commissioner comments and others, personal experiences, is that some dealers have brought the trade-in value up to the value of the book and then increased the selling price of the car over the book value, so the TAVT turned to zero. And what the intent of this change is to fix that by making it book to book. If you're going to use book for the selling price, you're going to use book for the trade-in. And that should cure that issue. The third issue that we've heard from our dealers is one of the leasing, and this is to clarify and make clear that the intent of the legislature is on leases to provide a trade-in value to the lessee, to the lessor, which in turn will be offered to the lessee. That is found on let's see, page 3, line 79. You can look at that, and I know there's been some controversy over this, but the objective here is to treat these valuations fairly, and we believe that providing the lessor the ability to get a trade-in value on this, clearly get a trade-in value on from the dealer on the purchase of another car, that in turn he would then sell to a lessee, would provide the lessee with the ability to get a better deal on that from a fair market value standpoint. Those are the changes that are significant changes. I know that there's one amendment that Chairman Martin has that addresses the leasing issue, and he can offer that at the proper time. But I'll stand for any questions, Mr. Chairman.
And the minority leader, Representative Abrams.
Thank you, Mr. Chairman. Chairman Rice, looking at the preliminary fiscal note, understanding that this is not an official fiscal note, am I correct in reading the bottom line on Table 2 is this will essentially create a $155 million loss to our local governments?
That's over a 5-year period of time as the projection over that period of time. And there are several variables in there, as the leader knows, in terms of the split values and in terms of going to a higher rate. We'll go to 7% next year. So there is provision in the bill already in this current law to address that. And what we've always agreed with the ACCG is that we would look at this down the road and see which direction it's going. Our take on this is that the change to book would provide a revenue offset on this that's not projected in this preliminary document that you've got. That's because it couldn't be evaluated. There's not a database of transactions that have been gained, basically. But you can come to probably a reasonable estimate of what it might be if you understand the number of used cars dealt with, how many might be affected by this change, and what the average fair market value of them was. You can calculate it out, which we've done.
And what was the result?
The result was that if you took the case that there's 10% of the 550,000 vehicles we do annually in a used car situation through a dealer, if 10% are gained, it's 55,000 cars. The TAVT value, that's $38.5 million.
So the offset would be still less than about a third of what the projected loss would be.
I think what you'd find in the early years that it would be approximately, it would equate. I mean, I didn't take this out over a number of years. I just did a static view of what the current data says, and I projected that for 2015 valuation.
So 38.5 million is that's your projection for 2015 only, or for 2014, 2015?
That's my assessment of on the data that we have now, which is the only data that you can be sure of. I mean, as we go out further, the variable gets a little more indefinite. That it would be a plus from a revenue standpoint on the book-to-book, depending upon how many you think they're being gained.
Okay. Thank you, sir.
Representative Talton.
It's the other term.
Representative Black.
Chairman Rice, if
Oh, I'm sorry.
if I remember correct, there's not some language in this title bill that commits us to look at these percentages of the division of that title tax in order to keep the local governments whole.
The local governments are guaranteed what their average ad valorem was for the preceding 5 years. That and it's calculated at $1 billion.
And will this be included in that?
Well, anything we do that changes
Right.
the revenue projection, but the state is guaranteeing $1 billion on the ad valorem replacement, which is the major concern at the county level. We looked at that over a 10-year period of time before we had ever passed the TAVT bill. It only went up or down 5% over that whole period of time. So the $1 billion was accepted. That's what's in the projection. They also get a rate increase every year. Next year, the split, instead of 52-48, will go to 50-50, and it continues on from then. Now, these numbers account for that, but that's the way it works. So they are guaranteed, and they are.
They should be kept whole.
Yeah, from my perspective, and from the numbers we've used all along, they should be kept whole. Yes.
That was my interpretation.
Yeah. I think the ACCG or the other locals would comment on the risk associated with getting to that number, and that's what their concern would be. That's something we can adjust in future changes if that becomes necessary.
Representative Martin.
Mr. Chairman, I just, at the appropriate time, wanted to speak to the amendment and then yield to the chair as to whether the committee would care to take it up. I don't know if this is the appropriate time.
Representative Martin, you and I had a brief chat about your proposed amendment. The chair rules that it is a substantive amendment, not a technical amendment, and therefore is out of order. But if you'd like to speak to it, you're welcome to do so.
Thank you very much, Mr. Chairman, and I would if and I'll try to be brief since the committee doesn't wish to. It's not the proper time to take it up. To the chair and members of the committee, I don't know if the amendment has been passed out, but I will try to explain. On lines 79 through 83 of the bill, we've made a change, and it is reflected in the fiscal note, whereby if a customer, a Georgian, a leasee, leases a vehicle, when that vehicle is turned back into the lessor, to the capital company, it could be GM Finance, it could be Honda Motors Finance, it could be Bank of America. That lessor, when another car is leased, would get a credit for the value of that car as is defined by Chairman Rice in the other portions of the bill. What the amendment would simply seek to do is to have that lessor, that would be GE Finance, Honda Credit, et cetera, pay to the leasee an amount equal to the title ad valorem fee on that credit. Basically, what I am seeking to do is, if we're going to give a credit when a leased car is returned, I want to see that credit get back to the person, the individual, could be a company that leased the vehicle, so that they are not handcuffed in and only receive the benefit of that credit if they lease again. So on lines after the after 83, the amendment would have read, provided however the lessor receives the returned vehicle, such lessor shall pay the lessee of the returned vehicle. And I've worked with revenue, actually, again, as the chairman said, it's more substantive in terms of language. The effect on the state, I believe, is nil, but it will return to the leasee an amount equal to the value of the trade-in times the applicable rate of the state and local title ad valorem fee as specified in Division B1B2 of this code section on the date of purchase. So what the amendment would seek to do, and perhaps over time we can get there, is to make sure the trade-in value on a leased vehicle, when it is ascertained that the TAVT that has been paid by the leasee gets back into the hands of the leasee, even if they choose not to lease again. So I think that's a fair way to get the money back into the Georgian that paid it, and understand that the chair's pause at taking it up at this late date, but I just saw the bill at 7 o'clock last night, and this is as fast as I could work on the amendment and get it out. appreciate the chair's indulgence in letting me present the idea, the thought, and perhaps we can get it done for Georgians in the future.
Thank you, Representative Martin. The Minority Leader, Representative Abram.
Thank you, Mr. Chairman. And I recognize that this would not be in order, but would like to possibly discuss an amendment that I would like to propose, although I assume I know that.
Sure, you and Representative Martin can be a team. Is that okay?
Absolutely. It may frighten him, but yes. And I want to say I do appreciate the hard work that Chairman Rice has put into this bill, but I remain deeply concerned about the impact to our local governments, and I would certainly welcome Chairman Rice's response. My concern is why we do not tax or treat the value of the used cars using the bill of sale rather than the Blue Book value. We are creating a remarkable set of deficits for our local governments, and while I certainly respect the analysis that you've provided about the possible offset, I'm deeply concerned that this is the second time we've had to come back and address the same issue, and the taxpayers of these local governments are the ones who are held to account if our calculations are incorrect. And so my amendment would be that instead of using Blue Book value, we would actually use the bill of sale value. And I'd welcome your response to that type of amendment if it were offered.
The current value, fair market value calculation on a new car is exactly what you say. It is the higher a selling price or book, less the trade-in value. That's how it's calculated. The bill went out of here previously with trade-ins with the used car fair market value calculated the same way. And so logically, I don't have any problem with that. But with the part you mentioned about the local governments and the impact on the local governments, I believe that having the guarantee in place accounts for the obligation of the state to pay the $1 billion annually in terms of the revenue that's due the local governments. And that should more than make up for what their loss was, and our hope is that would satisfy the need. Logically, I don't have an objection with your amendment, but that's the way that the current law reads. It does read book on for the selling price, and the only change we're making is book on trade-in to handle the problem that we've got. And the problem we've got is this gaming that goes on. That's all we're trying to do right now. In the future, I would hope that we'd be able to readdress that.
Thank you, sir.
I see no other questions. What is the pleasure of the committee? Move to pass. Sign a second. All those in favor signify by saying aye. Those like sign. Bill passes. Thank you. House Bill 823, Representative Powell.
Thank you, Mr. Chairman. This is 823. It is a bill that takes the alternative fuel bill that is in current code, but which the sunset expired, and it extends the expiration date and adds the words wood pellets in line 13 as an alternative fuel that would be subject to this sales tax exemption, and it provides for a sales tax exemption on construction materials only during the period of construction, and it sunsets in approximately 2 years. So the fiscal impact of this for both state and local sales taxes is approximately $2.8 million. And I'd be happy to answer any questions from the committee.
Representative Martin.
Chairman Powell, we talked a little bit about this yesterday. Tell me about the fiscal note we had was for the addition of the wood pellet plants, correct? It was sort of focused on that?
Yes.
I just dawned on me last night afterwards, there are other, ethanol, the other plants are in there. We're extending the credit to those facilities as well that had sunset in 12, was that included? I mean, can we just ask, was that included in the fiscal note?
Well, the fiscal note took that into account, but
Okay.
there were actually two aspects of it. Number one, those particular aspects of the industry are believed to have been basically built out. There are not any ethanol plants or similar kind of alternative fuel facilities that are currently on the drawing boards or contemplated to the knowledge of anybody that I've talked to. The second thing, by putting in a sunset that had a relatively short time period, you could pretty much be assured that there would not be any that people don't already know about that could be then put on the drawing boards on a fast track.
Further question, if you
Sure.
Again, not to hurt your proposition, but had you thought about, since that's not contemplated and wasn't in the fiscal note, perhaps removing those things other than the wood pellets to make sure that we weren't inadvertently, creating a situation that the author didn't intend by extending the credit for butanol, ethanol, et cetera. It would be easy to do the bill. Just something for consideration, because I know that would not affect your initial proposition.
Well, we had two hearings in subcommittee, and that issue was never raised. We could certainly have discussed it at that time, but this is an alternative fuel bill, and it would be somewhat interesting to have an alternative fuel bill that only had one alternative fuel listed, and there are multiple ones that we have in the past incentivized, and certainly we're adding one. We're not foreclosing any of the others. It's just as a practical matter. I don't think in a two-year sunset that's going to be a possibility, but this is a generic alternative fuel, not just for one industry.
Representative Peake.
Thank you, Mr. Chairman. Chairman Powell, just a couple of questions. I'm sorry I missed subcommittee yesterday, so help me understand two things. Would you explain what wood pellets are, just so we'll know for the benefit of the committee? And second question, I've gotten some pushback on this for some reason from folks asking me to take a second look at it. Would you kind of help me explain what the opposition would be? And so, two questions.
Well, I don't understand the opposition, other than I think that there's a little bit of pushback from folks that do not want competition for the same materials that they may be purchasing, but that benefits the landowner from this aspect of having more options to sell and more competition for the purchase of those materials, which are usually waste materials, but not necessarily always. But to answer your first question, as far as what are wood pellets, they're basically compressed wood fibers that makes it easy to store, load, and they're compacted. But then they are primarily shipped overseas. This is a benefit for our exports and our port at Savannah. But they're shipped overseas because they're clean burning and they're a renewable resource. And then they are decompressed, if you will, or ground up and then used in boilers for fuel. And so that's what they are, but that's easy to ship and handle, and you compact them by compressing them, but they're dried wood fibers.
Okay. I'm in support of your measure. Just thank you just for clearing that up. Appreciate it.
Okay, thank you.
Minority Leader Abrams.
Thank you, Mr. Chairman. Chairman Powell, as we discussed yesterday, can you speak to the effect that this would have for small rural counties that have an abundance of materials but do not currently have facilities that can process these materials?
What is anticipated is that there will be numerous small plants. The fiscal note took into effect the account that there would probably be 5 to 7 plants, approximately 6 plants built in the 2-year window during which this would be in effect, that they would employ somewhere between 50 to 75 people each plant, plus that they would have somewhere in the neighborhood of 350 indirect jobs created by each, so that you're looking at a total direct employment of about 390 jobs in 6 plants and approximately 2,100 indirect jobs. But they are scattered out in rural areas where trees are plentiful and the raw materials that they use are plentiful. But these are generally poor counties that have higher unemployment rates. And these counties do not have the ability to give incentives like tax abatements or infrastructure because you are dealing with 390 jobs spread over 6 plants in various parts of the state. They don't qualify for projects of regional significance, which qualify for state assistance. And so one of the things that this sales tax exemption will do is allow the companies that build these plants to be able to finance the infrastructure that normally a municipality or a county would furnish or would be available through other state assistance. Like, for instance, in one county I'm familiar with, Talbot County, the site that would be suitable is on a highway and next to a rail siding, but is several miles away from a natural gas line. So a natural gas line would have to be constructed and extended for a couple of miles, but there's no money to do that with. And so having that kind of sales tax incentive would enable that to happen. But you're looking at high unemployment counties, and even though they don't meet the criteria of projects with significant regional impact on the state level, for these rural impoverished counties, they are significant.
So if I can restate, for an investment of $1.6 million, we can likely cut the unemployment rate in a number of counties by 1 to 2%, given the amplified effect of having 75 to 100 new jobs in each of these counties.
Yes, ma'am.
Thank you.
Representative Houston.
I think in Talbot County, if I'm correct, it's not 1 to 2%. The unemployment rate would be cut by about 20%. Thank you.
Jesse, no further questions. What's the pleasure of the committee? Do pass in second. All those in favor signify by saying aye. Opposed, like sign. Thank you. That completes our agenda. Thanks again to members of this committee for being here. Thank you.
Thank you, Mr. Chairman, for being here.